Futures are flat, suggesting another round of tight range-bound trading. The Bank of England leaves rates unchanged at 0.5%, and the ECB is expected to make its announcement at 7:45 a.m. Eastern Time as investors follow every move from European leaders on the road to Friday's EU summit. Economic data on tap includes jobless claims, the wholesale number, and natural gas inventory. And former MF Global CEO John Corzine is scheduled to testify before the House. I'm Jill Malandrino with The Street, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer with T3Live.com.
And I'm Jill Malandrino with The Street's Options Profits, and together we bring you the morning call. So we are set up for another day of range-bound trading in front of a lot of news out of Europe. The Bank of England didn't cut rates. They're still at 0.5%. As of now, I think the ECB is actually reporting if they cut the interest rates or not. So we'll come back and take a look at that. But again, you know, another day of range-bound trading. So how are you positioning yourself for today?
Well, right now we're hostage to what's going to happen on Friday and over the weekend. And overall, technically, I think the action's been very constructive. You know, we had a huge move last week that we're absorbing nicely. And now we're right in front of resistance with a tight pattern that traders love to see. Because when tight patterns expand, you have points of reference and you have points of entry. So if you take a quick look at the chart of the S&P, let me show you what I'm talking about. If you take a look here, you will see, just to recap real quick, this was that outside day, this was that reversal, led to a huge move with pent-up energy all the way to 1292. Since then, you know, we tried going sideways, we had this wedge, we resolved to the downside, only to bounce back hard. So now we're hovering below this 1260, 1264 area, and if we could just get above this, get a little clarity out of Europe, I think we're going to be at 1292 in a New York minute, and then we could have some momentum into Q1 of 2012 up into the 1320, 1340 range, but we have to get through this weekend first.
Right, and you know, I was talking to a couple future traders yesterday, and what they're doing yesterday and today is they're rolling their December contracts into March, which is the next front month, and those strikes are at the 1250, 1260 range, which means we do have more range-bound trading. This European thing is not going to be resolved overnight, but our job is to tell you where things are outperforming, and that is why our theme for the sector today are the ags for 2012. I love that space. We've been talking about them since September with our play for options profits with Mosaic. This is a group, they had a great 2010, tricky 2011, 2012 metrics are on fire. It's an easy group to understand. It's about supply and demand. The world is growing, India, China, the demand is there, and
yeah, man's got to eat.
So you got to eat.
So does a woman. But what's interesting is, like, this year, we really as traders didn't focus on the ags, because sometimes, you know, sectors are in play, sectors are out of play, and this group has been sort of on the back burner. But when you're on the back burner, that's when accumulation happens. That's when institutions actually start getting involved in their positions, and then once they've eaten enough,
right,
ags eaten enough anyway, you know, then you get some momentum. So if you want to take a quick look at the chart of the MU, which is one of the ones I follow, you know, I see a nice setup here. And plus, short term, yesterday, you know, when the market was getting hit, all of the ags went positive first, showing you some pent-up demand. So that's relative strength, and I think that's some place you can get a good bang for the buck.
Right.
So let's go right to MOO. Nice name, MOO for the ags. Here you go. Inverted head and shoulders. Here's the left shoulder, here's the head, here's the right shoulder. You take a closer look. Nice bull flag, holding above the moving averages. If the ags start to get, or MOO starts getting above this 49.63, you could have a nice move all the way up to about 51.69, which is the next level. And then with time going into Q1, if we could close above this neckline, the measured move of this pattern from 42 to about 52 is, you take a broader view here, in the 60s, which would take you through this downtrend and all the way up above the highs of last December.
Moving along to my favorite name in the space, Mosaic. This company is putting cash to work. This is what we look for, whether it's in the form of share buyback, dividend, expansion. They purchased 1.2 billion shares back from Cargill at around 54-ish. The CEO said it's one of their best investments that they've made this year. That says a lot to me.
Okay, so fundamentally, if that's in stride, technically there's also a tight pattern here. So if you look at the chart of Mosaic, it's something to watch. I think as a trader, it starts getting above this 54 area, you know, and bust through this moving average. It's going to come back in play. Right now, it's like in the incubation phase, but above 54, it looks better. Could have a pretty easy move back to just say, you know, the high 50s. And then real resistance, if it's a macro play, comes in at the moving average at 66. So short term, 54 and change is the level to get through with some volume.
Moving along to CF Industries, ticker CF. This is a name that we have spoken about a lot this year. It has, you know, relatively outperformed.
Yeah, at times this stock has been really good. It's sometimes, but it's been pretty frustrating. You know, so fundamentally, if they could actually start showing some quarter-over-quarter growth and not disappoint on earnings or whatnot, it could go. But, you look at the chart here, another tight little pattern that'll be good for traders to watch and market participants. So if you take a look, you'll see CF. So if you like this ags thesis, this is a level to be in tier 1. As a trader, it starts clearing this 150, 151 area. You could see a move back to around 160. This is a pretty potent bar, pretty potent directional bar that could be hard to get through. So if the thesis kicks in and they start getting a little hotter in this group, it could take it out, and then you have 170. But first things first is getting through above this lower pivot.
Moving along to Monsanto, they took up their guidance on Tuesday, and the metrics were not specific to the company, but for the industry. Again, it's a supply and demand story. Supply is tight, demand is there, and this stock, it reflects in the stock price.
Well, this one I took a look at. I like this pattern better than the past two. If you take a quick look, just technically, without the fundamentals, take a gander. This is already above the moving averages. This also is through some resistance. This resistance right here, which was from earlier in the year, it already took back. So this stock, if it starts getting above 72 to 74, you could see a quick move back to the highs. And then this one, I think, is the best technical setup right now.
Moving along to Agrium, ticker AGU, another name up over 2% yesterday.
So let's take a quick look here. AGU, this was a leader at some point a year or so back. It's at the lower level. I feel like it's a little unloved right now. It's below the moving averages. You do have a higher low. It's starting to nudge up. I would think maybe if it lifts above 71.60, you have a move to about 77, and then you have a real big downtrend that comes in the 80s. But from here to there, nice little trade for you. And then as long as it keeps making higher lows, like low, higher low, maybe it does it again and continues, this one can get in vogue. But technically right now, it seems like it's lagging out of that group.
Rounding it out with Potash, ticker POT, and I'm going to go Red Dog Cheesy here. This stock lights it up for traders. This is a name we have been in and out of this name with OP, with T3. It's a stock that traders love to trade.
Well, that was the first, old dog, new tricks, whatever it is. I went to that first yesterday. It was down like 30, 40 cents. It went positive. It had a push. So I did go back to that one because that's something that usually used to be the strongest stock in this group. If you look at it now, it's a bit unloved, but there is a small technical pattern here. So take a look. Another lower area, little downtrend to trade against. If it starts getting above this 44, you get a quick move to 46, the moving average. Then if the group starts to get better next year, you have some room all the way up to this 50 area, which is, the old supply, and then the moving average comes in right around here, which is longer term. But for right now, as a trade starts getting above 44 and holds, it could get a little bit smoking.
Okay, there you go. So pay attention to this sector in 2012. Agrium, Mosaic, CF, Monsanto, Mosaic. This is a group that fundamentally, and for the traders out there from a technical perspective, it makes sense. It's identifiable. So we're kind of really excited about this play going to 2012. We're going to go to a quick commercial. When we come back, we jump into the trenches.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back to the morning call. We jump into the trenches with the financials. They really outperformed yesterday.
Well, this group starting last week when we first got that news on that Wednesday, it was the strongest group. We talked about January effect situations. I know the banks have been unloved for the past few years, usually a headwind versus a tailwind, but there are times a year when they have actual tailwind. And tax loss selling has been done. Some of the major defaults that everyone was thinking had to happen, whether it was Greece or some of the other sovereign nations, they're a little bit off the table for now, so shorts get scared, bottom feeders come in, and then you get a tradable move. So if you take a quick look at the XLF, you can see it's starting to hold higher and continue. So take a look at this chart. This was the higher low versus the October low. Okay, and then on that Wednesday, you had the huge gap up. You never even thought to fill this gap up. It stayed, went sideways, and now you just had some follow through to the upside, and then a little bit of follow through again yesterday. So I think at this point, you do have some room. You could go back to the old highs from late October, and then we'll have to figure out what the story is here. At this point, I think 70% of this easy bank move is over. There is still some room to trail it, and if you want to stay as an investor in it, stay the course, but some of the fast money has already been booked.
Right, agree with you there. Let's take a look at some of the individual names. Goldman Sachs, this one's been beat up every which way. It was up almost 5% yesterday.
this was one of our focuses yesterday. I've been talking about using it as a barometer. Goldman Sachs put in that higher low, and then I talked about, a little sideways action, another buyable spot at 102. It went from down $1 to up 4 yesterday. That's a great trade for traders. It was on off the charts. It was on the radar. We talked about it. If you look at Goldman Sachs, I'll show you technically what we were looking at. Look here. You'll see this was, the move back to the low, so it made a higher low, so almost like a double bottom. This was buy number 1. Okay, a lot of people caught it, and then it had some follow through. Then it went sideways. I said, if this thing can stay sideways, stay above 98, it could be good for an additional move. So yesterday, here was your additional move through 102, closed around 105. It has some room, but I would say again, 70% of the trade is out of the way. But stay the course with Goldman because it does have intraday setups for cash flow, and lately it's been a little bit more. It's been a little bit more follow through to someone holding it.
Right, and if we have to move along to, I'm not a big fan of the banks, but if I did have to pick one, it would definitely be J.P. Morgan. I think they're the best in class for many reasons.
J.P. Morgan was a good catch-up play for me yesterday because as you saw, Goldman Sachs went through that flag pattern, early. I'm like, why wouldn't J.P. Morgan do it? So I bought that, and I still own some J.P. Morgan. If you take a quick look here, I still think there's some more room. Not a blockbuster room, but here is your nice little sideways trade. If you entered, when it broke this lower pivot, like we showed you these lower pivots in the ags, that's why it's exciting sometimes because when you break above it, you get some nice short covering. So I would say if it stays in this box a little bit longer above yesterday's high of 34.20, you could see 36 to 38. So again, 70% of the move is done, a little bit of room, and then we'll figure it out from there into the first quarter of next year.
Moving along to Bank of America, this is like my Gap of the retail space. It's like my least favorite stock next to Gap. I have nothing positive to say, but let's see what the charts are saying.
Well, charts say it can go to about 615, 630 before it gets some resistance. Nice percentage move if you were a bottom feeder. I know a lot of America owns Bank of America, which I apologize, or why am I apologizing? I don't work for them, but it's unfortunate because you thought, oh, Bank of America, you can go long it, and it hasn't been the case. If you take a quick look here, it does have a bit of room. A nice little flag pattern also from this lower level. So if it could start getting above this, just say 595, you could see 611, and then if it really catches fire, 657 into early Q1 of next year.
And rounding it off with STT and PNC. PNC was the first place I actually worked.
Oh, there you go.
19 years old, in school and working.
There you go. I wish more of America had hustle like that. I was actually bartending, waiting tables, and emceeing bar mitzvahs. Anyway, you look at STT, here you go, as I was also a 3.2 student in college. Nice little breakout here. This is a good little stock, okay, or a good little stock. For a bank, it's actually clearing resistance, which I just showed you the other ones weren't. So this was a nice buy for people watching it yesterday. I think this can continue. This is showing relative strength in that sector. State Street looks pretty good.
Okay, so some financials. That's where we are in the trenches today. We're going to move on to quick hits for quick cash, starting with Netflix. It's almost like we talk about Apple every day. Now we're kind of like on a Netflix trend. Anyway, this stock moved up yesterday. There was a vote out of the House regarding video rental history.
Well, you know what? Like we said, some stocks are broken, and as investments, you can't touch them. But as trades, they're good, and some things are better than others. And Netflix, in the past week, has been a good trade. It's opened up down a few times, showed some relative strength, and then gave you a big move. If I show you the chart, you won't see it. But yesterday, it was down like 80 cents, went positive, was up $2, $3. That was a trader's delight. So if you look here on the chart, you'll see that there is some small room. You do have tax loss selling out of the way. This is when you should have been selling it here at 220, and now down in the 70 area. It could pop back up to 80 to 91. So just do it incrementally. If it gets above 72, 77, you could see about 75. And if it were to take out 75, at some point it could squeeze up to 91, and then that would be the easy, bounce back doggy trade.
Moving along to soda. We started taking notice with this name on Tuesday. The thing was up 9% on Monday. It was up another 3% yesterday.
Again, these momentum stocks that got so battered and bruised, and the managers had to take them off the books, and people had to take their tax loss selling. So now it's, if you sold it right, you could buy it for cash flow. And soda we talked about on Tuesday. Everyone's like, why are you talking about soda? And look at why. You had a big up day. It's crawling up. You look at this downtrend. If you were short soda, you better be scared because you could easily get to this 39.50, and then at some point up to 45.80. So again, this was your sell spot. This is when it showed relative weakness, and you had to get out of the way. And now if you got out of the way there, perhaps for cash flow, you can make a little bit back going up into this area.
Moving along to SINA. That's another one that caught a bounce.
Yeah, this one I don't love. I'm just doing a real short term. Yesterday, same type of scenario. Market was down. It was the first one to go green. I bought some, went positive. It was up like $1. I looked at the chart before, and I'm a little upset that I did list it, but we'll take a look here. I could say you have a higher low. It's still so weak, below all the moving averages, so this is just a trade. If it were to get above yesterday's high of about 64.55. It could continue, but just do this one intraday because, you know, the muddy waters, all these Chinese internet reports. Baidu is still pretty much the only one left that's investment quality for now.
Moving along to MGM, you love trading the casinos, and this group acted really well yesterday.
Well, LVS is the investment quality. It's the class of it. I'm waiting for LVS to finally break above 47 and get going. 12-month consolidation. At times, MGM could be a good trade. And it was so beaten up. It's been a January effect type play also. I see a level at like 1050. If it's not, it shouldn't be your focus. But if you are holding 8, 9 positions and you want to just put some cash to work, I think this is a decent play for you. So take a look. You know, you have a nice tight little range here above 1050. You know, you could see 11, and then I think going into next year you could see 12 and change. So that's about 15 to 20%. You know, you could put your stop in. You know, anywhere I would say around 950. And then overall, take a longer term look. There is a bit of a downtrend that if it does break above, you know, it could actually, yeah, it could get a little bit better. So, you know, just some money could go to work there. Not too exciting, just a up position.
Let's round it off with the gold and silver ETFs. Again, we're seeing future trading, you know, out into March, staying range bound, and these two it's been pretty quiet this week, but there is some nice action there.
Well, gold's been trying to, it corrected, and now it's trying to build a new pattern. Yesterday was the first day I actually bought silver in a long time or even traded it. The patterns are getting tighter. I think they're acting better. I think both could have an additional move. If you look at GLD real quickly, you know, this is the pattern here. Obviously, this is when you could have sold it, when it started showing relative weakness, when it broke this support area. I'll let you look a little bit closer. And now, you know, now it's hovering once again. Last time we bought it was when it broke this tight little pattern here, and it gave you a nice move. Now it held higher. It's coming back into this downtrend. If GLD can get above 170, you know, there's no reason why it can't go back and test this 175, especially considering, you know, what is going on in Europe. They're about to start the printing presses all over again, and then it's typically gold trade, you know, drags up silver. It's a little slower. If you want to take a look here, decent little pattern also. Nice little wedge. You know, this was the last time we traded silver. Look, the same pattern as gold. You know, wedge fell to the downside, but it did, you know, low, higher low, higher low, higher low. If this were to start getting above, just say 32, you know, you could see a move to maybe 34. So for cash flow, could be a decent trade back up into resistance.
Okay, so again, another range-bound day. All eyes are going to be on Europe. Quiet on the earnings front. Not much going on. Economic data today, we have jobless claims and nat gas inventory.
It's going to be a day of rumors. You're going to see all the rumors of what's going to happen tomorrow. A lot of headlines, very whippy. So just know your time frame, know what you want to be in. You know, I'm a little bit longer than I want to be right now. I'm hoping that they break this trade before, get above 1266. You know, nice day today into tomorrow. So this way you could, you know, take some profits and not have such weekend risk, which we will have as all that news will be flowing all weekend long, not, you know, Friday intraday while we're trading.
All right. Good luck, everybody. Keep it nice and tight. I'm Jill Malandrino with The Street. That's your morning call. Don't forget to catch Scott at the end of the day with his market wrap of the charts, and he set you up for Friday and going to the weekend.
Thank you.